going on, YouTube Nation? This is GB Merce. This is an update on my M1 Finance portfolio. I have 5 portfolios. My first strategy was just all ETFs that gave off monthly dividends, but I want to get a little aggressive and more aggressive because I found 2 stocks. I kind of changed my strategy. I'm not really that much into ETFs that much. I mean, it's a little more conservative, so I'm going to be a little bit more aggressive. And I updated my ETF monthly dividend portfolio to a completely new dividend portfolio, which has monthly, one monthly and 2 quarterly dividend stocks. So right now I'm at $452. I had a pretty good gain in return, which is not bad with my exchange traded funds that I had. But, you know, when things are $100 a share and you decide to throw $40 in, each month to get your portfolio a little bit bigger and stronger, how are you really going to grow when you have really good, don't get me wrong, they're really good stocks. It was like Wisdom Tree large cap dividend fund, which is like $100 a share, but really if you want to start racking up the cash with that, you got to throw in some bigger money. So I'm going to go a little bit more aggressive with some smaller stocks that are cheaper. 2 of them give off quarterly, and like I said, 1 gives off monthly. So I put money in EPR Properties. I have about 50% of EPR Properties. EPR gives off a monthly dividend, and it gives off rates. It is a real estate investment trust. EPR is selling. I'm looking at my phone right now. EPR stock. The stock on EPR right now is $73.06. It gives off a dividend yield of 6.16% per year, which is very fantastic. It's been on Zacks.com and many other websites, Motley Fool, to retire with dividends. So that's something, I don't know why that just did that, but I apologize. So this is why I looked into it. And actually this next stock, which is called CWCO, I'm looking at it right now. This is actually a unique stock, and this has to deal with water and resources. It's called Consolidated Water Company Ltd. Gives off a 1.9% dividend yield. It is at $17.14 a share. That has grown up in the past 6 months from $14 to $17. The year to date, since February, it was at $11. Looks like, I'm just looking right now, January 18th, it was $12.39. In November, it is $17.08. So it is growing right now. It is actually getting a pretty good reputation right now within Motley Fool and Zacks. I will just look up the symbol CWCO right now in Zacks. I'm looking at it right now, CWCO. Consolidated Water on Zacks. It is listed as a hold right now. It is not too bad. It is in the top 39%. And their industry rank, they're 99 out of 255. Top 44% in their sector rank, which is not bad. But the price per share is what really attracted me. It has done well against the S&P. I will compare it right now just to show proof. CWCO in the past 5 years. I will look at this right now on my phone, and I'm comparing it right now to the S&P. So in the past 3 months, it has beaten the S&P by, it has been up 20.96%. The S&P was only 7.28%. Since CWCO started, since its inception, it has been up 766.01% compared to the S&P to 477.19%. Past 5 years, let's see, it is right, it's a little bit below the S&P. It is 43.51% versus 49.10. In the past year, CWCO has killed the S&P 27.91% to 13.46. All of my sources are on Google. In the past 6 months, it has been 30.44 to 7.35%. So that is pretty impressive right now. The other one I looked at is Regionals Financial Corp. RF is a stock. I'm looking at it right now. It is 16.88% per share. Gives off a 3.7 dividend. It is a quarterly stock, so it is back on the rise. It has grown. Since the recession hit, has taken a little bit of a hit, but is getting back up there. I really like the way it's been going. I'm going to compare it to the S&P right now. In the past 3 months, it has killed the S&P 18.04% to 7.28%. Past 6 months, it has beaten the S&P 12.16% to 7.35%. In the past year, it has beaten the S&P 23.66% to 26.36%. It has been a little bit down in the past year versus the S&P. It's actually been negative 30.30%. In the past 5 years, it has beaten the S&P significantly by almost 20%, actually more than 20%, 69.92% to 49.10%. And the max, if you look at it, the S&P has beaten RF, but because it was probably due to the recession hitting. But a heads up, it is $17.06 a share. It has beaten the S&P by 20% in the past 5 years. So that is my rationale for these stocks. They are increasing their dividends. So that's the other thing. EPR, I'm going to look up their dividend history right now. Their dividend history, I'm going to look on, it's a good one, NASDAQ.com. So EPR Properties, it has increased, it's at 0.37 cents. 37.5 cents a share, so it has gone up every year. So that it is growing and is looking fantastic right now. CWCO, I will look it up right now. WCO stock. It is at 17.14 cents a share. Dividend history. And again, I'm on NASDAQ.com. No. Alright, so this is what NASDAQ is telling me right now about CWCO. It is increased from 7% to 8 cents a share quarterly dividend, so there is a lot of potential with that one. Regionals Financial as well. I'm going to look up RF stock. It is right at 15 cents a share. So it has been up since June from 14 cents and now is at 15 cents a share. So I'm actually debating just slicing out Regionals Financial and just throwing in my E-Trade account. So I will keep you posted on that. But as of right now, here's one of my updates in my portfolios. So again, I have one stock that gives off monthly dividends that is very aggressive, EPR Properties, and I have CWCO and Regionals Financial Corp. CWCO or Regionals I might slash out and just throw in Shaw Communications that gives off a monthly dividend, or Apple Hospitality Rate, or a few other things. So I will keep you updated on this one. This is a very aggressive one. I'm probably going to throw in maybe an extra $200 for this, just to get EPR rolling. So I will keep you guys posted. Thank you for watching this video. Make sure you like, comment, and subscribe. Let me know what you think on this. Do you think it's too aggressive? Do you think I'm not making a good decision? Do you think I should make, have better stocks in there? So let me know what you think, and you guys have a good one.